US stocks recovered last week as tough trade talk between the US and China started to look more like each side testing leverage. This quick turnaround aligns with an immutable economic law we've long tracked. Supply chains can't be rewired overnight. That, combined with Fed cuts and the AI theme, should help drive the momentum we've seen this third quarter US earnings season. We think U.S. China trade tensions are again bumping into an immutable economic law. Supply chains can't be rewired overnight. We saw this in April. Stocks slid after the April 2nd tariff announcement, but we believed that this law would prevent tariffs from landing at the proposed maximal stance. So we quickly re-upped risk, a bet that paid off. We think these dynamics are playing out again, but on a smaller scale. The stock market saw its sharpest one-day drop since April after the recent U.S. China trade flare-up. Yet equities quickly recovered as a path to a deal between the two countries surfaced. We watch negotiations but think immutable laws make a de-escalation the most likely outcome, which could also help keep sentiment high as earnings season rolls on. We think three factors will drive broad earnings growth: resilient US economic growth, Federal Reserve easing, and AI-related spending, particularly from the Magnificent Seven big tech companies. This in turn supports our relative preference for US stocks over Europe's, where earnings growth continue to lag. Earnings growth is also broadening out beyond the Magnificent Seven. The gap between earnings forecasts for those 7 stocks and the remaining 493 companies in the S&P 500 is narrowing. We still think it's important to get granular. So far, markets have cheered growing AI-related spend, but we're watching for any productivity gains or revenues from that spend. We also monitor how major deregulation will support financial stocks. Lastly, we're tracking the tariff impacts. US corporates have largely withstood tariffs to deliver strong earnings growth, but certain sectors will feel the pinch more, particularly smaller companies and producers of often imported goods. We think immutable economic laws will limit trade policy extremes and, together with resilient growth, lower rates, and the AI theme, support US stocks. Yet we stay selective, watching AI spend and tariff impacts.